not being used to raise capital. It's not being raised for any, it's not backed by full faith and credit of the government. It's not redeemable for a particular project. It's just accepted because there's demand and limited supply. Ethereum allows you to create designer coins that can be used to fund projects. You might want to track real estate transactions or transportation of goods in the supply chain. Or you might want to create a scientific database and allow a scientific community to use the network and transact through a coin. So those are all in the come. You have to raise money to do it. How do you raise money? Well, you could use the Ether20 currency you create for your project and call it, Dan's or Joe's, and sell those to raise money for a project. Typically, people will try to create a community. They'll airdrop coins, meaning give them out to people in the community. They might have a pre-sale and do a discount sale of the coins, and then they do a public launch and sell the coins. So the problem is that these coins at that point become securities because you're raising capital, and the SEC doesn't believe that you sell them in amounts into people who are clearly investors, and it's not a security. But they're also a commodity because they're just like this bottle of water. So the Commodities and Future Trading Commission could regulate it. They're also currency, so you have to regulate against anti-terrorism, Patriots Act, money laundering. They're also taxable transactions, so you have international tax reporting. Most countries in the world nowadays report tax transactions to each other so that nobody can cheat governments from tax. So you can go on and on. There's a lot of regulation for such a simple concept as creating these blockchains. And so we have to advise on them like securities offerings or other transactions, and we have to advise on the regulation, which has kind of put a whole cloud over the whole space that people are now starting to do their way out of.
So people are raising money for these projects with really novel mechanisms like you're talking about. What does that do to you as an investor, doing venture capital? What role do you play in this world?
Yeah, so this phenomena over the past 18 months of ICOs and broader blockchain cryptographic asset projects is really turning the venture world on its head. The model that most venture capitalists are conditioned and trained to is early stage, make an investment in a team for a significant amount of ownership, 5, 7, 10-year journey in which they build a product, hit product market fit, and hopefully an enduring built-to-last business. In the past 18 months, over 100 teams and projects have raised over $30 million with nothing but a white paper and a dream. So it's very disruptive and very challenging, and the VCs in the space who've been in it since 2008 will completely be transparent that we have to trade ourselves, I think, in two different worlds, and it's hard to keep those worlds in your head at the same time. The other thing I'll add on the overview, just two aspects of what's going on that are unique. Specific to public, permissionless, open blockchains, it's important to keep in mind these projects are open source. Code is available for anyone in the world. There's no defensible IP here. This isn't like building a traditional corporate enterprise value company. And VCs are in the game of enterprise value creation and capture. That compounded with, that leads to an incredible rate of innovation and movement here. We weren't talking about security tokens or ICOs all that much a year ago, maybe about a year ago. It really came to the forefront. And when you're looking at these tokens, what is a token? A token is code, and that code is malleable, and you can create a token that behaves like a security, or behaves like a debt instrument, or behaves like some hybrid of the two, or behaves like something that we haven't seen before. So this combination of the open source nature and the fact that they're broad, loosely, globally united communities that are developing and working on these projects, and the malleability of software and code is what's creating this ridiculous rate of change and innovation, which we haven't really seen ever before.
And Charles, you have, remember that the buyers have a lot of interesting motives, right? So if people in countries like China and South Korea, Russia, other countries, would rather move their wealth abroad and put them in different pockets that are out of the reach of their governments. There are a lot of people who would rather transact outside of traditional banking. So some of that's okay, some of it's not, but there are a lot of different reasons why you can go raise $500 billion with a drop of a hat on a crowdfunding campaign, and that's what the regulators are looking at. But that's why the investment paradigm is flipped on its head, because it's non-dilutive. And why wouldn't a company just go create a cryptocurrency and sell coins and raise capital? You don't have to do, you don't even have to meet your investors. You don't have to have all those contracts with board, rights and all that stuff. You just go do it and you raise a capital.
I mean, clearly there's been a lot of, let's say, very creative financing happening through ICOs. I'm curious, do you think this is just a matter of the regulators are behind and they're eventually going to catch up? I mean, SEC is starting to get more aggressive on how they treat these things. China has, shut down a lot of the exchanges in ways for people because it was, it was like you pointed out, a way for capital outflows to happen that were kind of outside of the control of the banking system. Do you think it's just a matter of time? Like this is kind of open to everybody, but is this just kind of like this thing that's happening until the regulators catch up and they're going to shut it down, or are they going to have to somehow adapt to? Like, what happens once all the governments finally kind of catch up to all this innovation?
No, I think it's here to stay, and I think it's going to only explode. And 10 years from now, we're going to wonder what all the fuss about the regulation. It's actually really not hard to comply with regulations. People just make it hard because they don't want to be regulated. But if you were a bank, you wouldn't question a bank regulator. If you were doing a security, if you just cross out the word coin and put stock, you probably wouldn't think it's that big a deal. It just wouldn't be as easy because it used to be completely unregulated a year ago. But I think it's the regulators will catch up and it'll be fine, and it'll be one of the, you'll see stocks, bonds, and cryptocurrency.
I think part of the challenge for regulators is the alphabet soup of agencies that need to be touching this new asset class. Like you said, SEC, Chicago Merc, IRA. There's no regulatory entity that fully encompasses the scope of what these cryptographic assets are. And I think what I think will happen is that entity will need to be formed, and analogous to like a Homeland Security cross-division type entity that will issue kind of clear guidance and think comprehensively about regulation on these assets, because right now there's different slices of guidance on different characteristics of crypto assets, but I see the government converging to a more holistic set of regulatory principles.
Jon, how do you think about this? Because you guys are working on using blockchain technologies. We've so far kind of talked mostly about financial things, but it's people like you guys that are using blockchain for non-financial activities. Are you worried that regulations against blockchain in general, over blockchain in general, could get in the way of you doing things that are, new features for people? Maybe give people like a little brief understanding of what you're doing that's not financial with blockchain.
Yeah, so in the example I gave with these spreadsheets, what it's keeping track of is money, right? But with a blockchain like Ethereum, it can keep track of data of any sort. So rather than strictly transferring money or having this shared data layer that everybody can access and see transactions of currencies, you can have a shared data layer of all sorts of different things. So for example, my reputation on Airbnb doesn't mean anything to Uber, doesn't mean anything to anybody else basically. It only matters to Airbnb. Whereas if this data, my reputation data, how I transact with other people, was on a shared layer that any company could access, this could open up quite a bit. It can make it much easier for these users, for these companies to onboard users, to acquire users. It can help me as a new user to a platform to have some form of established reputation, even though I haven't transacted on this platform. So that is certainly a really important piece of what we're doing. As far as regulation, this is exactly why it is important to rebuild these technologies on the blockchain. So one very specific example would be Airbnb in San Francisco. Not too long ago, the city decided to start finding Airbnb something like $100 a day for every listing that they had that wasn't in compliance with their newly formed regulations. And in one fell swoop, they removed 50% of the listings in San Francisco off of Airbnb. So whether or not you agree with why they did it, I think it's scary to see that this can happen so easily. And it's important to remove these single points of failure because there's a lot of times where this regulation is unnecessary. And I think it's important, for the projects that are building this, we want, in our case, we don't even want to be able to do this. Even if someday we see something we don't like, it's up to the community to decide what is okay and what's not. And we want to take the power away from these centralized entities that once they reach a certain size, it doesn't make sense to go against the grain. It doesn't make sense to fight the government. They're just going to say, hey, 50% of the listings, whatever, we'll keep making money, no big deal. But for the other people that were involved, the people whose listings were taken down, people who are now going to have more trouble finding a place to stay in San Francisco, it's going to create quite a few problems. So I think regulation is exactly what we're fighting in a lot of ways, and we're keeping that in mind. We're going to be, of course, this blockchain is a very global phenomenon, and regulations vary widely across the globe. So it's important to build something that can withstand the ever-changing nature of these regulations.
Great, so I want to switch topics a little bit and talk a little bit about, especially for people that are maybe a little more skeptical about this space. It kind of seems like, I think, Bitcoin and blockchain sort of just popped up overnight, right? I mean, like last year, all of a sudden, everybody's talking about it. CNBC is like roaring 90s back all over again, right? Everything's about how to get into cryptocurrencies. I kind of get the comparison to the internet that, the coming of the web was important because it have opened up a lot of new opportunities, but anybody who invested in pets.com or, rolled it all on MySpace is probably maybe thinks that was a little early. Isn't that the same situation here? Like this is this new thing, it just popped up and, wouldn't it be better to just maybe, if you're not really in this, wait 10 years and then you can buy into Facebook? Nobody wants, is Bitcoin MySpace? I guess is the real question.
Well, it depends on your risk appetite, right? So if you put, did you just see Berkshire Hathaway's annual meeting?
Oh yeah.
Yeah. So,
he hates. They all hate it.
Well, but the part that should get your attention is if you put $10,000 at the end of World War II into gold, or you put $10,000 into the Dow Jones basket, which would do better?
I mean, I don't. They said. Dow Jones clearly did much better.
Right. You that would be worth $52 million, whereas your pile of gold would be worth $300,000 or $400,000. And so the reason the space is so, got so much attention is because Bitcoin went up to $20,000, nearly, right? And if you know Pantera Capital, Dan Moorhead's fund, Dan lives in Woodside, if you had put his minimum $50,000 in when he formed the fund in 2013, at one point last year he had a 25,000% return. So your 50 grand would be 12.5 million, right? But most people take their money off the table after they quadruple their money. But that's the point, that it's because of the incredible bubble And so there was Neo, Civic, Stellar, I mean, there are all sorts of coins that zoomed up in value. I mean, my own son, who I can tell you is not an accredited investor, opened a bunch of accounts and he made more off of coin investments than his day job at Oracle. So it is what it is. But I do think that over time, you're going to have plenty of really solid businesses. The regulation will kind of even out. And it just makes so much more sense in this day and age. You have all sorts of foreign investors who are not going to try to figure out terms of debt or equity and all that. And they're fine with putting their money in companies as passive investors. And so it's all that capital from abroad that's going to flood into this.
I think the title of the panel was Signal from Noise. And to me, all of the frenzy around speculation and price and the get rich quick, that's the noise. My bias is peel it all back and let's understand what's happening at a fundamental technology, team, network, at the first principles level. And this isn't like an overnight thing. The Satoshi white paper was released in 2008, and that was taking ideas from the cryptographic cypherpunk community that had been iterated for decades before that. What's changed is this most recent crazy run-up, and that's why it's tipped into the popular consciousness, and that's why it's on CNBC, and the mainstream world is getting a sense of it. But and the main use case, to be clear, for all of these cryptographic networks right now is trading and speculation. That to me is the short-term noise. What's happening long-term is a foundational infrastructure change and a new layer of the internet for which we can't even imagine the types of use cases and products and networks that we've built on top of it. But if you're seeking the truth of what's really happening here, that's where I would start focusing, and less on what price of Bitcoin is today or tomorrow, because that's short-term and not, that's.
So speaking of infrastructure, I know there's a lot of people here who've built businesses, in hardware distribution. One of the criticisms you hear about a lot of these chains is just how much energy they consume, how incredibly inefficient they are, right? You hear like stories that mining transaction in Bitcoin uses more energy than that's all of Denmark. I mean, it's phenomenal amounts of energy. So I think, one question is, when we talk about infrastructure, is that, like, how big can this get? Like, is this basically, this is like a thing that, it's eventually going to collapse under its own weight because it's so inefficient, and who can possibly afford that amount of energy?
Yeah, so the way I like thinking about it is that right now, miners are being incentivized to be the most efficient at capturing the reward that comes from these blocks. So by doing that, you're able to, they're pushing for better and better hardware and trying to find more efficient and clean energy. So a lot of the energy that a lot of these miners are actually using are from dams, or it's excess energy that's coming from, that's just being wasted. So some of the people that we're working with, basically they put shipping containers near the power plant and have a special deal with the power plant or with the hydro dam, and they're able to actually get cheaper electricity because it's direct, but as well as they're helping the actual power plant balance their costs and everything. I can go into all the
people have been trying to argue, if you get into this at all, you read about these two different techniques for securing the blockchain, which is really like how people go about deciding when all those cells are agreed upon, those rows, right? Mm-hmm. You hear about proof of work, which is what you're talking about, mm-hmm. right? Where there's lots of hardware. Then you hear about this new thing, it's proof of stake, where basically it doesn't require people using really fast machines so much as just like placing bets and putting money into it. I think one interesting thing is, like, are we going to a future where in the end, these blockchains are secured by specialized miners who've gone and found dams that they can buy electricity from? Or is this going to be, you know, systems like proof of stake that aren't as energy intensive and everybody's mining Bitcoin on their phones?
So this is the amazing thing about the blockchain is that you cannot change it afterward. So it's because it's so expensive. And if the barrier of entry is lowered, it makes it easier for people to manipulate it and change it. And one of the most valuable things is, I don't think anyone in this room could probably think of one thing that you can't use digitally that can't be changed with just code. And something with proof of stake is it's code essentially securing code. And humans make mistakes, and hackers are very good at finding ways to extract value if it's worth it. And the more money and the more time and effort that keeps going into these blockchains, the more valuable the reward is for them to hack it. And proof of work is probably, I don't think proof of work is going to go away. Probably proof of stake might actually maybe be adapted into it, but proof of work is something that you have physical hardware, there's time and there's energy that goes into this, and if a government or somebody tried to replicate this, it would actually be a lot harder and a lot more effort for them to do it. And it gives that opportunity you don't even have to be a developer to run mining machines. But with proof of stake, you kind of have this different dynamic where you have to, it's whoever holds the most and whoever has the most money can actually be the one who chooses which transactions can go in and which ones are changed.
Yeah, this question about energy consumption is something that keeps me up a lot at night, thinking about how sustainable this is from a systems, net global perspective. I don't think you can make the argument that a net new energy consumption suck the size of whatever top 20 GDP country you want to throw out is net positive for the carbon, for climate change, any way you want to slice it. And this, like right now, every 10 minutes, there are 12,000 nodes across the world that are competing on an extremely complex math problem to solve a Bitcoin block. And they're using compute and energy and resources to do that. And every one of these chains and networks that get built, I worry that the economic incentives that are driving the human behavior are not tied to the potential negative externalities of what's possible here. So this question of, can we get to a consensus mechanism that maintains all the positive attributes of what's made decentralized crypto assets work and awesome in a much less computationally and energy intensive way, I think will be kind of a key question of how this whole space moves forward or can move forward.
I mean, when you think about data centers, like nobody's questioning how much power the data centers that power the internet and everything are using. Nobody's questioning how much banks use in energy to secure the money that we use all digitally anyway. So it's something like because you can measure it, measure the blockchain's energy consumption, everybody wants to put it on display. But if you think about if every person in the world, or not every person, but at least if everybody's using this technology in some form or fashion, and it's able to actually grow in such a way where the number of transactions is balanced out, or you're actually able to confirm more transactions in Visa with less energy than they would need, or less people they would need. I think it will be sustainable at that point.
It's that last point that's key. Can you do it in a way that would take less energy and less people? And that's the key.
Yeah, when I hear about this issue, that's my reaction, is that, yeah, sure, if you view mining and the electronic costs in isolation, of course it looks bad. But the whole point is that you're replacing paper transactions and paper you're funding projects that make transactions much more efficient. I'm working with a project, they're tokenizing what will be the largest wind power farm in the world in North Africa. They have all of the permits and the land, and it turns out that wind can power half of the energy needs of the world if these kinds of scale projects, and God bless them if it works, great. But you know, it's being done for a reason, not just to chase coins, right? And actually, if you want to save the world, everybody should stop eating meat for a month. True fat cows, methane, and the stuff that they give off create more global warming than all of the manufacturing in the world's history.
And you make a
1 year's worth of cow we eat.
And you make a good point, right? That the cost of blockchain is, these blockchains has to be offset by the benefits that we get out of them, and that's kind of happening now through all these new tokens being created, right? There's Bitcoin was sort of the one that first popularized, but now you have Ethereum, and on top of that, we mentioned earlier, Ethereum lets anyone create new tokens for just about anything, wind farms, whatever. I'm curious, like, you look down the road, how each of you feel about this. Is this like, are we gonna be in a world where we have thousands of tokens? It's kind of like the stock market, like people should get ready to have to go, you know, pick out which tokens they want, or are we gonna be, will those condense down, or most of those gonna burn out, like the .coms did?
I'm not exactly sure, you know, which route is going to happen necessarily. I think there's some people who think there will be one cryptocurrency to rule them all, and there's others that feel exactly the opposite. What I can say is that this idea of using multiple tokens doesn't seem too far off from what we do today. So I'll give an example. At our company, let's say, you know, there's one token for Ethereum. There's one token for something called IPFS, the Interplanetary File System. The coin is called Filecoin. There's tokens, maybe there's a stable coin introduced that is used. So there's probably going to be multiple tokens in a given ecosystem. But if we can solve this token interaction problem and abstract it away from the end user, then it doesn't really matter if there's 5 tokens in the background or 10 or 50. What matters is when you pull up your app on your phone and you click, I want to go stay in this hotel, stay in this house, you know what you're getting. So when you go to Amazon and you click buy, there's a ton of processes that are happening behind the scenes. There's API calls, there's all these different services being used, and you as a user have no idea what's being used, how it's being used, you don't understand the technology behind it. So I think, we may see a world where a user doesn't know, maybe they don't even know they're interacting with the blockchain, right? That's not important to them. What's important to them is that they're getting what they want. But behind the scenes, there's some complex token interaction happening, and that's instantly swapping between all these tokens that are involved in the transaction. But the user just sees, hey, it's $100 to stay at this room. Here's my $100. Now I want to stay at this room.
Cool. So I want to ask one more question, give each of you a chance to answer this quickly, and then do we have some time for some questions?
Yeah, we have Q&A afterwards.
Okay, great. So, all right. So we tried to kind of give a little bit of a survey of the ecosystem and what's going on, and I think there's a lot going on there. Signal versus noise. You have $100,000 you're going to put into something, invest in anything you want in the cryptocurrency blockchain space tomorrow, Monday. What would it be and why? How did you arrive at that?
Good question.
These are not investment advisors, by the way. So everyone doesn't have to individually give that disclaimer.
Let's start on that end.
So I'm not a gambler, but the only casino game I play is craps because there are 2 dice and it's just arithmetic, right? Probabilities, you have 36 outcomes. So I'm not a gambler. In fact, I gave 10 grand to my son to invest in coins at the beginning of the year because I didn't want to try to figure it out. So I just advise on the legal
So you
side.
invest in your son. He's opening a fund.
Yeah, exactly. I don't, I advise the companies. I don't want to sit there and look at my financing. But actually, these stable coins fascinate me because the way they work is that you would, like a central banker, you would buy back coins if it got too hot, where you would start releasing coins and create more money supply if it became, if you need to dilute it. So theoretically, if these things take off, you'd think that some central bank or a government would step in and say you're screwing up our inflation policy or monetary controls. And so those things really fascinate me. They're trying to correct for arbitrage issues and problems that make international banking inherently imperfect. But if they really do replace them all, then well, you start to wonder if they get too popular, these governments will start clamping down on them, I think.
I'm gonna, I guess, tell you what I've been doing, but kind of like what Hoolie was talking about, the fundamentals, you gotta really look at, there's a lot of there's a lot of stuff that's not valuable at all right now. So there's thousands of coins right now, or tokens, and a lot of them are they're just now starting. And you gotta kind of look at, Bitcoin's almost been around for 10 years, Ethereum's been out for a few years. All these, gotta kind of look at the history between all these things and actually what are the fundamental things that they're actually doing, what's their purpose, and can the other one do the same thing? And kind of, I've kind of started a company, but I've also hedged some bets into a few of these ones. But I still think that when it comes to the central banks and stuff, they're going to look at these same exact fundamentals. And I think when it comes down to security and what actually is going to hold its value and just kind of that store of value, Bitcoin might be that thing that gets pushed up the most.
Yeah, I would, first I would agree, probably Bitcoin is, if your motivation is store of value, that's going to be probably the safest bet. I'm pretty biased, and I would personally bet on Ethereum. There's a lot of different reasons. Probably the biggest one is the developer community behind Ethereum is massive. It's orders of magnitude bigger than most of the other blockchains out there. And frankly, there's just a lot of very, very smart people who have been working really, really hard to solve a lot of these problems. So, there's definitely challenges with scaling and throughput and all of these things, but I'm just trying to look at who's working on these problems, and based on what I've seen, there seems to be very smart people who are really thinking through it. They're not just throwing out solutions and seeing if it sticks. They're really trying to think through edge cases, trying to think how these solutions can be attacked, how they can be gamed, and just from what I've seen, that would probably be my bet.
So assuming assuming I'm not talking about early stage venture investing and teams and products that are built, we're just limiting the scope to.
You could be an angel investor.
Just for sake of my own mental simplicity, think actionable, liquid, available investment opportunities. It doesn't exist today, but it probably will in the next 6 months. I would get a top 30 crypto coin index ETF with low fees. In absence of that, I would look at the registered exchanges like GX, CoinDesk, whatever assets they support, and buy a basket. With the knowledge that whatever percent of my, this is as a retail investor, whatever percent of my net worth I'm putting into this, there's a possibility it goes to zero, there's a possibility it goes 100x, but either way, as part of my portfolio, it's an asset class that is completely uncorrelated from any other asset I can invest in that is dependent on global monetary fiscal policy. That's how I think about it.
It's really interesting. You said before when we were talking about this earlier, the thing about this technology is it's not really that much new technology. It's the blending of technology and economics. And so, really want to understand it. So, go read an economics textbook. You basically have to be an economist.
Yeah, go read what is money?
What is money?
Why did civilization form?
There's a really good book called Debt: The First 5,000 Years, which is a really light read, easy for the beach. Just kidding, it's very complicated. It's good. It's good. Okay, so we have some time for questions.
Yes, we'll have 5 minutes for questions, and if you have a question, just raise your hand and I'll give you the mic. Oh, many people have questions.
Thank you. Yeah. I think thinking about blockchain as not exactly equivalent to cryptocurrencies. What I'm interested in is the panel's comment on using blockchain as something that, for example, in health data area, verify and save a significant amount of human resources and money in the future. And what do you see that future look like?
Sure.
I guess the way I think about it is there are middlemen everywhere, really, and these middlemen make their business and make their money by being this point in the middle of two parties or many parties that the entire system cannot really do without. So I think there's going to be many, many industries that are changed and many people and many middlemen, frankly, that are no longer going to be relevant. So health is, there's tons and tons of examples of health, food, anytime this parties are putting themselves in the middle of these transactions, whether it be to make some money or to facilitate the transfer of data from one party to the other, I think we're going to see a shift. It doesn't mean that middlemen are going to be removed completely or entirely. It just means that they're going to have to focus and their value that they're adding to the system will probably narrow, and a lot of this wealth will transfer back to the parties that are really core to the transaction to begin with.
I'm curious, just real quickly, especially for Hoolie and Curtis, because you guys see a lot of different companies. Do you see, is healthcare pretty amenable to blockchain? Are you seeing people getting good traction there, or is it?
Yeah, remember, anything that is centralized can be decentralized. And there's a trend, the deep trend toward personalized medicine. And in lieu of Obamacare, the electronic health records being more portable. And then you have HIPAA regulation and privacy for healthcare, which makes it really painful. I'm sure we've all had to deal with the doctor through this weird password-protected system just to, get a prescription or something. So that's all going to change with the blockchain. That is one of the easiest applications of decentralizing all, because it's really your information.
Yeah, health is one of the use case areas that we're most excited about and spending a lot of time on. There's a world of private permission blockchains that can sell into the existing health world, almost like a B2B software. I'm less excited about those and more about the open permissionless kind of bottoms up networks where patients, consumers themselves can be incentivized to contribute and be rewarded for contributing health data into a common store.
You want to be HIPAA compliant, so be on the most secure blockchain.
I know you had a question. I know, 1, 2, 3, we'll probably take 3 more questions.
Okay.
Would love to kind of hear your perspective on centralization and decentralization. A lot of the companies who are experimenting with blockchain kind of want to own the blockchain, and it's difficult to have other kind of players, especially competitor players, when you might have a net positive, you can cooperate and be on that blockchain. How do you guys think about the value of having a decentralized ledger or a blockchain versus like an internal database for the actual company by asking people to kind of participate into your own blockchain if you're a company trying to experiment with this kind of technology?
The way I like thinking about it is that anybody who's making a private blockchain is going to, if it's not open source and they're maintaining it themselves, eventually that lead developer is going to leave. Eventually, it's going to need to be maintained. And if there's billions of dollars on it, or people's names and information on it, you want to make sure that especially if that company, that's not their main business, you want a public blockchain. You want something that can actually be maintained by the entire world rather than just one entity or just a few entities, especially if it's just banks or just hospitals or it can be any type of industry. But if you have something that is moldable and changeable, and you can use it for different things, then I don't see why you would want to use the private blockchain.
Yeah, and I would just add, if you're not focused on decentralization, you probably don't need a blockchain, frankly, and a traditional database probably make things a lot easier, cheaper, faster, and better for everybody.
That question is actually one of my first filters I'm thinking about this space. Centralization is good. Centralization has done a lot of awesome things for us. Like our experiences as users are driven from the centralized world. So there has to be a compelling reason why this project or this approach makes sense in a decentralized world, because for a lot of things, a centralized database is a much better way to go.
Cool. Any other questions?
Hi. Lots of tycoons are not recognizing the Bitcoin. So what kind of disruption you're thinking about that it could make the changes, like technology or central agency or whatever? And then what is the biggest thing that you think will be the downturn of the Bitcoin or blockchain? So disruption to make it work so that tycoon chase after it, and then the worst thing that will make downfall of this technology.
So what's the biggest positive impact and probably the biggest negative impact that you foresee? Is that a good summary?
So when I talk to venture capital and private equity investors, I don't know any of them who haven't dabbled in Bitcoin. I don't know if they actually did it or not, but they always have some story about I bought some Bitcoin and it zoomed up in value, and it's just a little experiment. And you just never know, right? But it's very tempting. The exchanges are an open internet. Just go on Binance or Gemini. I'm not pumping these. I'm just saying these are very, Cumberland mining, and you can just go buy a portfolio. It may take you a week to clear funds and try to get a portfolio going. But I think that people are putting money in, and people are reaping the rewards of all that right now. The bubble would be if the fraud continues. If there's just a lot of fraud, and 1,000 coins, a fraction of those are going to survive. And you hear about 13x guaranteed returns, people taking the money and not spending them on what they should. Celebrities, they always tend to be boxers and wrestlers for some reason, touting these things. So it's a fraud. It's really the fraud. So you should want regulation. You should want the regulators to come in and basically kick all those to the curb. And the rest will be actually pretty legitimate businesses. There are some amazing businesses being built. So that's where you're going to make the money.
I think philosophically, this is really just a huge transfer of wealth on a lot of different levels. So you mentioned, tycoons are coming in and buying Bitcoin and a lot of cryptocurrencies. One thing I am philosophically worried about is this wealth transferring back into the hands of the rich more and more and more. I think this whole system was designed to try to fight that. And regardless, wealth will transfer, for sure. It's going to transfer from governments that don't act on it to the governments that do and are supportive of it. I'd say an argument can be made that a lot of wealth is transferred to the miners. I think as these projects are raising money, it's very difficult for them to raise from everybody and anybody, even though they may want to spread the wealth out and give everybody an opportunity to invest. They can't, because they have to, try to stay out of jail and out of, the SEC's off their radar. So I think it's kind of a double-edged sword, and personally, I think it would be a little bit disappointing to see this turn into just another transfer of wealth to the rich.
All right, I'm going to cut you guys off here, but But thank you guys very much. Let's give a round of applause for our great discussion.
I know a lot of you still have a lot of questions. They'll probably be floating around after this. We're going to be moving into a break after this, but